Your comments and likes mean the world to me and truly motivate me to keep creating valuable content. I'm always looking to improve, so please don't hesitate to leave your feedback in the comments below. Let me know what you liked, what you didn't like, and what you'd like to see more of. Your input is incredibly valuable to me. And if you have not watched the ICT video of Lecture 2, you will find that in description. To potentially capture trading opportunities that might be missed on larger timeframes, consider analyzing multiple timeframes, including the 15-second chart. ICT's methods can help you identify entry points on the 15-second chart, even if you miss them on the 1-minute timeframe. On the 15-minute timeframe, begin by drawing a horizontal line at 7 a.m. After observing price action post 7 a.m., we might potentially identify the formation of relative lows. However, this is not a guaranteed outcome. We can only anticipate forming relative equal lows if the price begins to rally from this point. Since relative lows haven't formed yet, we won't annotate this on the chart. However, it's crucial to mentally prepare for the potential scenario that may unfold. Post 7 a.m., our focus shifts to identifying potential relative equal highs and lows. It's essential to disregard any highs and lows formed prior to 7 a.m. for this analysis. Shifting to the 1-minute time frame, we begin scrutinizing price action post 7 a.m. for potential relative equal highs and lows. Immediately after 7 a.m., a noticeable relative equal high formed within a tight range, followed by a swift decline as buy stops were triggered. Recall ICT's principle. Price tends to transition from jagged to smoother areas. Here, price took an area which is smooth and make it jagged. And here, price took buy-side liquidity. Within this range, we're on the lookout for relative equal lows. If they haven't materialized yet, we patiently await their formation. A crucial point to remember, we exclusively focus on swing lows forming after 7 a.m. Any lows created before this time are disregarded for our analysis. A subsequent rally would confirm the formation of relative equal lows, establishing a potential target for a potential trade. A price rally surpassing this swing high confirms the formation of relative equal lows. If a subsequent price decline occurs, the pre-7 a.m. low can serve as a potential downside reference point. A critical point to remember. When price has consumed a significant portion of the market's liquidity, often indicated by jagged price action, we ideally want the price to retrace below this area before continuing its downward movement. Ideally, price should maintain its momentum after successfully consuming liquidity. Any retracement back into the area of heightened volatility could potentially signal a reversal and should be monitored closely. Next, we'll identify and mark areas of inefficiency and price movement on our charts, and work our way up from 1-minute chart to higher time frame. So we have SIBI here. We'll also pinpoint smaller areas of inefficiency within the price action. Despite their size, these zones often act as potential turning points. In particular, remaining small inefficiencies within larger gaps are especially noteworthy due to their untapped potential. We will refer to the original fair value gap, but with a focus on determining the remaining imbalance within that zone. If price goes above fair value gap and comes back down, then we can expect the price to come to the top wick of candle already tapped in fair value gap and work as inversion FVG. We also identify a special type of inefficiency with a notable volume imbalance at below. Any inefficient areas accompanied by significant volume imbalance will be included with inefficiency. When identifying fair value gaps in areas with significant volume imbalance, we prioritize the entire price range encompassing the volume imbalance rather than focusing solely on the candle wicks. We disregard the wick in this case. Price reached the upper boundary of the inefficiency, dropped, and formed a new inefficiency. Subsequently, price revisited this new inefficiency, respected its consequent encroachment, and declined further. This is very important, guys. This should go in your notebooks. This specific scenario involves a buy-side imbalance and a sell-side inefficiency, which, according to ICT, often signifies potential reversal patterns. This concept is referred to as inversion fair value gap. Since the market has already reached a significant high before the New York AM session, and considering we're currently in the New York AM session, which is known for retracing back into the London range, buying into this fair value gap is wrong. At this price point, consider when we don't have any price action on the right-hand side. And if we are looking for entry, where did your eye go? Think for a moment. I think that will be this big FVG. But if you want to get better short, we will look for the stop hunt here and the breaker, and from the breaker to the high. Do we have any fair value gap? If there is, then ICT will navigate away from the breaker and look for shorts. From here, consider relative equal low would form in the future for potential target. Price drops from inversion fair value gap and creates another fair value gap, which is good entry point if we are bearish and we have everything in play. If you can notice, there is optimal trade entry, model 22, and we also have relative equal lows for the target now. The very first fair value gap prior to the stop hunt, this is very important. Is why ICT colored him differently. This is change in the direction and what this is doing working as an order block. This is change in the state of delivery. If we don't have this FVG, then we can use the breaker and put the stop loss 2 ticks above the high. We will divide 7 to 10 o'clock and put horizontal lines there. And for every hourly session first, 30 minutes are pre-session where we expect fake swing. In this case, we will want price to go up to go down. We can look for the relative highs and lows prior to the 8 o'clock, but we cannot do this for 7 o'clock because we are trading for the New York AM session range. We have this energetic drop, which created this fair value gap. What else is there? People who were short, they will trail the stop loss there, and algorithm have done the job here and took those out. Price then goes to old fair value gap. And markets break down. Look at the work around halfway point of this fair value gap. Market drops created an inefficiency, and body of the retraced candle is respecting the upper portion of fair value gap, which indicates price is going to go lower. We have relative equal high and relative equal lows, and when we have both, what should we do? ICT taught in first lecture, we will wait for one to be purged, and then algo will attack on the other one. When we have any inefficiency that's been worked many times, ICT does not want price to reach there. Again, this makes price action low probability. Now he said, even if market from here crashed 1,000 point, he does not want to be the part of this. We will also be measuring the price ranges with Fibonacci extension. So in these cases, we will put Fibonacci from the highest high to the lowest low. You should get this in first 30 minutes of session. You should change your Fibonacci settings like ICT has it on, and we will continue doing the same for the remaining 2 sessions and look for the price extensions level and observe how does price behave at these levels. We have disruption here, and now we are having the same thing below. This indicated price might target this swing high because now we have jagged price action at the bottom and relative equal highs on the above. We have inefficiency here, and this could be immediate rebalance. Immediate rebalance when we have extended range that goes up and then drop goes back, touches the candle high and runs above for the inefficiency and liquidity. We also have this fair value gap in this. I want this to be open and act as breakaway gap and reach for that level above. We will be observing this last leg up on 15-second chart. Let's see if we had missed an entry on 1-minute chart, then did 15-second offer some entries or what? This is the immediate rebalance, so ICT puts line on that and it highlight on 15-second chart also. Now we will be observing the price action here on 15-second chart. If you look at what is happening here, it traded up and coming right back down. What is occurring there? Coming right back down and rebalancing the inefficiency of this quick sudden price run. Knowing the algorithm is repricing here, we have relative equal high here and fair value gap here. Price went above and took buy-side liquidity. Price comes back to fair value gap with 1-minute immediate rebalance. So it's first return and after taking buy-side liquidity, but we will not anticipate price falling down because we have not met the objective, which is this high. So this drop give you opportunity for 15-second long. For me, if anyone had already bought at the lower prices, then this is where ICT will add one more contract. Suppose we had missed this entry then on 15-second, we have another long here, and then this small FVG here. Smaller time frames provides more opportunities. It does not mean that we should start just trading on 15-second chart. We need context in the narrative with it. ICT put emphasis on doing tape reading, which is simply observing the price action from 7 to 10 in the morning and mark your levels and see how price behaves there and journal everything. If someone is trading and did some mistakes, note that down, but do not curse yourself in your journaling. Do positive self-talk. There. I'm also making PDF notes. If you want that, please read the description.